Morning, everyone. If you're able to hear me, let's drop a one in the chat box, and welcome to Thursday's live Forex market analysis and forecast. And if you're in Telegram, well, not Telegram, but if you're coming in live directly from Zoom, then feel free to send in your questions there. If you want to ask, if you would want me to unmute your mic and you can ask a question openly, and you're also free to do that as well. Right, so as always, we are starting things off with USD CAD. Let me just share that screen. So we had a lot of movement in the market this morning, especially for the pound pairs. And I have two pound pairs that I generally trade, which is USD, pound USD, and pound yen. So I think I want to start off with those first, so you guys can see exactly what transpired in the market this morning with the release of the cash rate from out of the Bank of England, where the interest rate pretty much stood firm, and that ultimately caused a spike in the market. However, even though we had that spike, we are still able to maintain our overall stance and our overall bias for both the pound USD and pound yen based on Elliott wave analysis. So what I simply did here is to make some changes in terms of how we would structure our wave count, right? So what we know immediately, based on the fact that we had this candle coming into the market in the last hour, what this is indicating to us immediately is that this initial move that we had down here, where we thought that this was an impulsive move, wave one, wave two, and a smaller wave one, and coming in to give you, let's say, about wave three. The fact that we got the market to reverse into this area simply means that the overall count that we had would have been invalid. And how do we go about making that a form of adjustment? What we understand is that if we look at it from the higher time frame, let me just hide these drawings so I can show you guys from the higher time frame. What you're seeing, as I said to you guys yesterday, is that overall, the overall market was still in an uptrend, and we had an ending diagonal completing wave 5. From that, we need to see what? Correction or move in the market. And the market corrects in what? In 3 waves. It corrects in A wave, B wave, and C. In this A wave, you can have 5 waves down, 3 waves up, and another 5 wave down. Right? That's ideally what we'd be looking at. When we take the information here and we assess the market, what we can determine based on what took place is that overall we have what? A, B, C. So we have our 3 wave countdown. And in that section, we can label this as potentially the first A wave out of the corrective move. What we're having now with this impulse is the B wave correction. And that B wave correction may take you all the way back into this area or potentially even higher if you're looking at an irregular corrective. And from there, we can start to look for our 5 wave countdown to complete wave C. But we all have to take that in strides as the market unfolds and provide and update our price data. Right? So how do we reflect all of what I just said? How would we reflect that on the chart itself? And from looking at the chart, what we're able to identify now is that the first movement out of the market here, we would have A, B, C to complete wave A, and we have B wave, and we have C wave down. So that's A wave. Because this is a part of a larger extension, we are able to label that now as wave W. We have another cycle moving up where we have A, B, C to give you A, and you have another A, B, C in here to give you B. And I don't want to get too deep into this corrective structure, right, to potentially confuse you guys. So overall, we want to just look to say that here we have A, B, C, which is another 3 wave structure in here. And that 3 wave structure would have completed the X wave of the larger degree. Right? And then from there, we were looking now for the Y wave to take shape. And as with most corrections, it sometimes isn't obvious until the move has been completed. So in that Y wave, we're looking now for a 3 wave structure. And we have it there. A, B, C. And again, why a 3 wave structure in here is that double X and Y waves are always in 3 wave cycle. How are we able to count that down? We have the market provide us here wave 1, 2, 3, 4, 5 to give you A and B, C. Right, so we have that A, B, C correction there to give you the A wave out of that Y. Then we have a B wave forming a triangle in here, where we can label that triangle as wave A, wave B, wave C, wave D, and wave E, finishing right here. And that entire move would have completed the B wave triangle. And then, as with all wave C correction, we generally need to see what 5 wave moves down. And we were able to identify those 5 waves, as you can already see them in here. Wave 1, 2, 3, 4, 5. So with that done, we would have completed the X, the Y wave pattern. And all of that Y wave pattern would be what? A larger A wave structure. Right? So like I said, correctives are very complicated at times, and we have to know exactly what we're looking at. So now that we have potentially completed wave A, and let's say that we have wave A there, we'll be looking now for where wave B would potentially fall. And all we're doing is just making market projections, right? Now, generally, wave B retraces about 61.8% of wave A. And wave A started here at the top of the market, right? So we had wave A starting up there. Let's just draw it in. Wave A starting there, ending here. And we're simply highlighting the 61.8% zone of that entire structure. And that's all we really want to see now. How will price react to this entire movement? We're still within those 2 areas of interest, as I've mentioned before. Right? So yesterday we were looking at the fact that both of these areas are now our area of interest. Once we got the market below our confirmed sell. So if you guys took this trade with me, we can note that we would be in this trade. Well, I'm in this trade now, but I'm currently experiencing a drawdown. My stop loss is at this stage here. Though I am looking for the market to move a bit higher, well, not to say move a bit higher, the overall structure would be invalid if price gets above here. But for the trade that I took, based on the fact that I took that trade on a different count that is taking place, I'll simply leave my stop loss just above this area of interest. So if the market pushes and gets any higher, I would close out that trade, exit that position there. Granted, it would be for a loss, but all I'd simply be doing at that stage is waiting, sitting on the sideline and wait for this overall structure to unfold. And then I will try to get in now on wave C. So we now know that wave B is currently what we're looking at. And wave C would be what? A 5 wave move. So wherever that lie, all I simply want to do is to see wave A, wave 1 of wave C come in, wave 2 of wave C come in. And then now I can look to enter on wave 3. And that's really what we'll be doing. So at this stage, if this market holds firm, where we can potentially have, let's say that we have some more sideways movements in here, and then the market continue to decline, and that would be ideal. And this position would still remain active. Otherwise, we would simply exit the position and wait. All right, so that's what we can look at right now. That's currently taking place on pound USD. If we move ahead now and have a look at pound yen, and we're essentially seeing pretty much the same thing taking place there as well. Yesterday, I said about 2 days ago, I should say, we opened this trade. Yesterday, we were able to take some profit out of this. In fact, not yesterday, but this morning, we're able to finally take profit out of this trade. The risk on it was 40 pips. Based on my overall risk management guideline, I was able to secure profits out of that trade. Wasn't able to move my stop loss, so I exited this trade for minimal return, right? But pretty much the same situation that took place on pound USD, same thing that we're looking at here. We have a WXY correction to give us the A wave completion, and we are looking now at B wave coming in. Will we get it above here, where B wave could very well be, or this overall correction could very well form an irregular pattern? And if that's the case, then we're simply waiting for this move to be completed. All right, so I would not suggest selling, nor would I suggest buying at this stage. At this time, I would much rather just sit on the sideline and wait to see what happened. So we can delete the trade that we had setup that we had. We can take this out as an invalidated level. We're still going to leave this one in and to potentially see how the market would react. Because what we're seeing now is this was the start of that A wave move right here. All right, let's use something else to highlight that. So here is actually the start of the A wave move and not this movement up here, right? So out of that entire move, we are already getting where B wave is falling higher, right? And all we're simply looking at is that B wave could potentially land between the 1.618 extension or the 1.382 extension level of wave A. And to get that, could potentially put my Fibonacci tools on this level here. I'll go back to the original template and see if I can identify it. And we'll put in the 2.7 and see exactly where that falls. So B wave could potentially lie anywhere within these areas. So this now is just a little area for us to monitor. All right, so that becomes now our area of interest. Right? So all we simply want to do now is to observe and see just how far this market would push. And more often than not, remember that when we were looking at the overall projection, we projected wave 5 to fall a little bit higher. And the market did not move as high as we had initially anticipated at about 144.50 or 144.60 thereabout. We were looking at the overall target to get up into that zone, right? Based on this overall structure here, right? So based on this movement here, we were looking for the market to come up here. Another guideline with Elliott wave is that if wave 5 falls short of the projected target, then you may find an irregular corrective moving to complete that move higher. So we're not sure if that's what will take place, but all we can simply do at this stage is just to wait and monitor the price action as the market progresses. right? So for now, we're out of pound yen, and we're pretty much out of both pound pairs that we trade. So now let's just look at USD CAD. And this morning I had shared with you guys that we're potentially seeing a B out of this market correction, right? So the market started down in these lows, ended the bear movement out of these lows. We had wave one finishing here of that new uptrend cycle. We have wave two, what we initially thought was wave two. Then based on the fact that we were not able to get a 5-wave impulse in here, but rather a 3-wave, we identified immediately that this is not an impulsive move, but rather a corrective. So we look at this now as A wave, and this would have been B wave. We would be looking for a 5 movement down to complete wave C. We did not get that 5 movement down, but instead the market started to consolidate. So out of that consolidation, all we're simply doing now is we're simply connecting the pivot points that the market would have created by trend lines. And those trend lines that we would have connected would have ended here and showing us the potential, or showing us a pattern resembling a triangle. So what we have to do is to label it as such until the market proves otherwise. So we're able to label it wave A of that triangle, wave B, wave C, D, and we were looking for wave E to come in here. Now, when I shared this forecast with you guys this morning, then we'll be looking now for wave C to finish off anywhere between this zone here or this level down here. Right? It's really just to observe and see how price action moves. Now, remember I shared with you the reason why I was looking at this level for potential entry. And it was based on the fact that wave D was here. And I'm looking at a potential retracement to about the 61.8 level. We fell short of that mark just a little bit, but that's completely fine as well. All right, so we're not in this trade at the moment in terms of getting in here. But if you were following me previously or following our analysis throughout the week, then you would have been in this trade from this stage here, because the market would have confirmed our selling price action, right? So you would have been in that trade at that stage, right? Currently, would currently be in a drawdown nonetheless, but still, this trade definitely looks good to the downside. What we want to see taking shape from here is market to break below this trend line, some form of retracement in terms of a retest of that level, and then we can continue lower. All right, so ideally, that's what we would want to see. But for now, this is still a bearish trade, and that would be my target level. First target point would be at 127. Right, and that's what I would be looking at for USD CAD. Euro USD, shared this with you guys already this morning when I did my first update. Right, that's if you're in the trading room, right? Then you would have seen this update from me this morning. What we're looking at now, based on the current market price action, is we have potentially completed. We're looking at what? Completing wave C. We have B wave done, and C wave generally unfolds in what? 5-wave market structure. So we have what? Wave 1, wave 2, wave 3. We have wave 4 coming in here, not entering in the territory of wave 1. And from there, we have wave 5 unfolding. We have a small wave 1 taking shape here. Wave 2, we look at 1, 2, 3, 4. 5 potentially coming in here to complete wave 3 of this wave 5 extension, right? So we are still short on Euro USD. What I would suggest, if you guys haven't already done so based on my recommendation, is to move your stop loss up down to wave 4, right? Because at that stage, you want to secure some profits. And that's if you took the trade here, irrespective of where you took the trade, I should say, move all stop loss to this zone, right? To about 120 or 120.50, right at wave 4. That would be your invalidation point. Because at this current stage now, because the market completed wave 4 here, what we could very well have taken place is this being wave 1, wave 2, wave 3, 4, and 5, finishing off right here. And this would potentially be what? An ending diagonal. Right, that's ideally what we may have, and it would be an expanding diagonal, right? That would be, right? And that's potentially what we could have. We're not calling it that as that yet because we're working with the basic tenets of wave principles, right? So that's really what we're looking at this current stage. We have wave 1, wave 2. We're looking now for wave 3, 4, and 5 to come in. And that should take us down to about $1.90. All right, so let's see just how this market would play out today. For dollar yen, yesterday, again, I was saying that this little area would have been my area of interest. And we were expecting for what? An ending diagonal to take shape and for the market to push higher. I initially had the invalidation point here, and we were looking now for price to either get below this low, and we'd be looking for sell, and we would have been able to identify here as a market top. But as I said, based on this current price action, we could very well see the market push higher to complete wave 5. And that's exactly what we have unfolded. All right, so now that we have completed wave 5, or potentially, what I can say is that we can have label here as the top of the market. And let's observe to see if this level would hold firm. So let's say that we have found the top, right? So what we want to see taking place now is for this movement down, whether it may be wave A or B, we need to see it staying below this area. And what we want to be looking at now is how this market is reacting, because this wave 5 here would have completed potentially either wave C of the wave 3, I should say, sorry, of the larger degree, or we would have wave 3 expanded, right? So if we take a deeper look at this overall structure, remember, based on the daily time frame, we would have completed wave 2, coming out of a very long and drawn out downtrend for let's just take it to the daily time frame so you can see it. All right, so we would have come out of a long and drawn out downtrend for our bearish market for pound yen, and I should say, sorry, where we had wave 1 pushing in at the start of April, round about the 5th of March. And from last year, had about 9 months of a bearish market coming in into January, where we finally got out of that structure. Since then, the market would have moved up, completing its first move. We got the correction in, and what we're at now is just some other movements coming in for the waves to start take shape. So when we take a look at that overall move from our perspective, what I'm saying, this move here is wave 1. We have wave 2 in here. We have a minor wave 1, 2, 3, 4, and 5 finishing. I don't want to label this as wave 3 as yet. How would I label it? It all depends on how the market retraces. If we get, because this is the top of wave 1 here, if we get the market to stay above this zone, then we potentially have that as wave 3 of this intermediate wave. So we have wave 1, 2, and we would have 3. The market comes anywhere in here and retraces. We could have that as 4, and we could look at that level there as 5. Right? And that's what we would want to be looking at, and to say, okay, this is where we have an extension within the third wave. Now we could have an extension of an extension within the third wave, right? And looking at. So I'm not making any project out of this as yet. It's just about waiting to see how the market holds. For those who are already in the trade, to trade. Sorry about that, guys. I seem to have lost connection there for a second. All right, so I think we're back now. So let's see if we can wrap things up as quickly as possible. All right. So based on what took place here, like I said, we're not looking to buy and I'm not looking to sell at this stage. It's all about monitoring that overall position. We have a couple of positions open already from this trade. We had our first entry down here. So we have about 3 positions active. We have our first entry down here at about 133, 103.33. Thereabout. The market pushed up, come back in. We got our second entry in here at 103.82. We got our third entry here at 104.38. So we're putting all our stop loss now at the third entry, which is 104.38. And this level, in fact, just realize that so we can leave all our stop loss where they are, and we're just simply monitoring this price action to see how it will unfold. Should we get back below here, then we can close out the positions that we have, and we simply wait for the market to give us an indication of the trend continuing, and then we can join back in with the buyers. But for now, we're simply sitting on the sidelines and allowing our position to just continue to run. It is already risk-free, so it doesn't make sense for us to look at closing out a trade and potentially cutting our winners. All right, so for for gold, now this market is playing out very, very nicely, right? And moving as expected. All right, now yesterday, we were saying again that we were looking for the overall structure of the market to complete wave C, and wave C would have been completed in a 5-wave pattern, right? And the movement that we're looking at out of that market is to say that we have wave 1, wave 2, we have a minor 1, 2, 3, 4. We're looking now for that wave 5 to finish off in here. Now, the interesting thing about this is based on the market structure from the daily time frame and the 4-hour time frame. and that is what makes this overall trade so interesting. This morning I had shared with you guys update to tell you exactly how to move your stop loss and what to do with this trade, right? In fact, I had said that it would be fine if you guys are looking to take profit and close out this trade entirely. That would still be fine as well, right? If we take a look at the 1 hour, at the 8 hour time frame, just a little bit more clarity compared to the daily. And from here, we can see, let's take it to the daily time frame. All right, and let me just clear up a few things. So from here, we're looking at the overall market completing its third wave overall out of the grand cycle. Ideally, we're looking at wave 4 finishing off in here where we had the XY correction for wave 4, and then we're looking at wave 5. Now, wave 5 to target at $2,280 or about the $2,300 mark, right? Now, what we are looking at is the fact that wave 4 would generally retrace to about 38.2%, right? And that's the entire retracement of wave 3. Wave 3 started further back down there, right? When we did pull in the retracement from this level and the starting point of wave 3, we had wave 4 coming right about in these areas, right? This area would have been the 38 zone. What we had a correction out of the market in here where we had a WXY correction, and I labeled that initially as wave 4. As the market pushed higher, we were looking at 1, 2, 3, 4, 5, right? Now looking at this structure here from the daily time frame, it is fair to say that this entire move here is better counted as a corrective structure, and not just any corrective, but as another X wave correction. And what we would have had in here would have been a double zigzag or a zigzag pattern, right? So if this is the X wave, then we should be looking now at a WXYXZ. And looking at it from that perspective, we would have this movement down here to be the impulse of A, this movement in here to be the B wave impulse and correction, sorry, and we should be looking now for C wave impulse to finish off wave Z. With that being said, and I remember that if you guys look back, and I'll share for those who are in the trading room, I will share the overall update on this structure, because I had already completed 2 scenarios for gold. One with the Y wave ending here, and another with the X wave, with the wave Z ending lower, right? So I had done 2 analysis on that. So it's all about monitoring the price action to see exactly how that would unfold. Take this back now down to the 4-hour time frame. We can observe to see what we have there, right? We're seeing, like I said, where this movement down here was wave Y that we had initially labeled. Now, the count that I had in the market was wave 1, wave 2, wave 3, wave 4, and wave 5 coming up there. Wave 3 was definitely not the shortest wave, because it was indeed longer than wave 1 and ended right at this level, right? So we I initially labeled this entire structure as wave A, but now I am actually moving towards labeling this, not wave A, sorry, as wave 1. I'm now moving towards labeling this as X wave. And we're now looking at A, which comes down in a 5-wave impulsive, 1, 2, 3, 4, 5. We're looking at B coming in here as a 3-wave correction, A, B, C. And we're now looking at the 5-wave impulsive move down to finish off wave C. And if we should project that based on the channeling guidelines, if this is wave A here, and that's wave B, and the overall move started up here, and we project a trend line and make a parallel channel to that trend line, we would have wave C coming in right about the area of 1724, which is where we had the 38.2 Fibonacci zone, right? So this makes gold a little bit interesting for now, but it is not a case where I am steadfast to say we are holding down to this rule to say that the market would extend all the way down here. Based on the 1-hour structure, in order for us to look at that, we still need to invalidate these lows. We need to take out this low here, and we need to take out the low from the 4-hour time frame of where we had wave Y. So we need to get below 1764 first, right? So the first target we want to get below is 1801. If we get below that target, then the next point that we want to be looking at is 1764. And if we get below there, then we can start to look at the market coming down to finish off wave Z at 1724, right? So like I said, pretty interesting outlook for gold as the market stands now. And all we're simply doing is waiting and seeing how this overall trade will unfold, right? So far, so good though, right? Where we are able to execute our position yesterday. The market did in fact became active between last night and this morning. And we're currently seeing the price moving as anticipated, right? So let's monitor this and to see exactly how this would actually work out. First target point, like I said, is to get the price below 1802. If we get the market below 1802, then we can start looking at 1764. For EuroCAD, interesting development as well here that's transpiring. We executed our trade up here at $1.55, right? And as it stands, yesterday I said to move all stop loss down to $1.5475. You would have been able to take profit, but we are still not closing out or putting in a trailing stop to take it down any lower. We're simply moving that stop loss down a little bit more, right into wave 4. What we have potentially taking place here now is a ending diagonal for wave 5. Now, based on wave guidelines, and let me just draw it right here for you guys, how an ending diagonal would generally unfold. Right, so this is pretty much the basic tenets of an ending diagonal. How the wave counts are, you have 1, 2, 3 waves up, 1, 2, 3 waves down. So this 3 waves up would be wave 1, this down would be wave 2, have 1, 2, 3 waves up to give you wave 3, 1, 2, 3 waves down to give you wave 4, 1, 2, 3 waves up, which generally overshoots the trend line to give you wave 5. Wave 4, more often than not, will enter into the territory of wave 1, right? So if that should enter, we would have wave 1 up here. And we would label this as 1, 2, 3, 4, and 5. Now, in an ending diagonal, while you're labeling those as wave 1, 2, and 3, notice that these aren't impulsive moves, but they are still motive waves. Motive waves tend to move with the trend, right? So in that, you would have this movement in here, you'd label it as wave A, wave B, wave C. And the same would take place here, A, B, C, A, B, C, and so on and so forth, right? Each of these legs, those A, B, C legs, can take the shape of a whatever pattern. You may find where leg A is impulsive, but leg C is not, right? And leg C may take the shape of a whole new pattern. So that's pretty much what is potentially taking shape here, because we do in fact have this overall move here down as an impulsive move, where we have wave 1, wave 2, the smaller wave 1 in here, 2, 3, 4, 5, completing wave 3. We have wave 4 in there. And what we have is this as an A, B, C, right? And this could potentially be wave 1 of that ending diagonal. And we're looking now for A, B, C to potentially give us wave 2, and so on and so forth. So we don't know exactly how this would pan out as yet, but we're simply just monitoring this overall price action. But it still looks good to the downside, right? And we're ideally still targeting our basin of just how this market would unfold as price pushes lower. Right, finally, we're going to be looking at Euro NZD. Now, what you guys can do in the meantime, if you have a pair that you would want me to assess or to give you my feedback or opinion on, you can drop that now in the chat and I'll simply take a look at that for you, right? And so definitely, I'm seeing flat correction. I'm not sure what we're looking at that stage, but let's see just how that would unfold. Right now, what we're looking at for Euro NZD is pretty much a similar situation. Now, what actually took place here? And again, I will label it to show you guys. Let's start from the 4-hour time frame. And on the 4-hour time frame, we were seeing where the market is creating a C wave correction, right? And it's a very long C wave correction that the market is doing. Better view would be to look at it from the daily. And as you can see from the daily time frame, where that market has been correcting, we have A wave, we have the B wave correction here, and we're looking now for the C wave, which is 1, 2, 3, 4, and we're looking for wave 5 to potentially end anywhere around these levels, right, at about $1.62. Right, we don't know if that will actually unfold, but that's just one outlook that we're looking at. Now, if we take that to the 4-hour time frame and we assess the situation from wave 4, because wave 4 is what we're really focusing on. The market moving, giving us wave 1, 2, 3, 4, and we're potentially looking now for wave 5 of wave 5 to unfold. Now, in that overall movement, we have where wave 5 is potentially expanding, where we have the market giving us a 5-wave impulsive move down in this level here to complete wave 1. Initially, I was counting this as wave 5. and we needed to see the market create a 5-wave impulse to the upside if this overall downtrend was going to hold firm. Instead, what we got, let's hide it so you can see. Instead, what we got is a 3-wave move up, A, B, C. Once we see a 3-wave move up, we know that this is still a correction unfolding. So we are now able to look at this as 1, 2, 3, 4, 5 in here. This is wave 1, this will be wave 2. We're now looking at another 1, 2, 3, 4, 5 in here. This can either be one of two things. It's either an extension within wave 3. So this could be one of wave 3, or it could indeed be 3. But the only way for us to know which one of them it is to monitor this area, top of wave 1. If the market stays within that zone and does not breach it in terms of getting higher, then we can label this as wave 3. And then we'll be looking now for wave 4 to come up and wave 5 to finish off lower. So that's ultimately what we'll be looking at. So if we should apply back the joins that we did now on the chart and take it down now to the 1 hour time frame. You're able to see we are able to label an overall zone 1, 2, 3, 4, 5, giving a wave 1. Market completing A, B, C structure to give you wave 2. And we have wave 1 of wave 5 of wave 3 extended, where we had a 1, 2, 3 triangle to give you 4, and a 5-wave impulsive move to give you wave 5. Right, and that became 1 of 3. Right, then we have correctional move in here to give you wave 2, and we have impulsive move down, a triangular wave in here to give you wave 4, and we had wave 5. Now, like I said, this could very well be wave 3 or wave 1 of 3. What we want to see is how this market is going to react. Right now, this morning, I believe that I had shared this overall trade with you guys in the trading room to say that we can close out our trade at this stage when I was looking at where the market has potentially completed wave 4. So to close out the trade at that stage, because we don't know whether or not this is wave 1 or if it is wave 3. And though we have our invalidation point here, it's better for us to stay on the sidelines again. Monitor this, especially that we're going into a weekend as well. We monitor this price action, see just how the market unfolds next week, and then we can potentially take on another trade to either finish it off at the 1618 extension at 165.40, or we can start to look at the 62.30. Right? So these are the things that we want to be looking at as the market progresses. All right, so we are still holding a short bias for Euro NZD, and we're just simply monitoring price action to see exactly how the market will unfold. All right, so this would have completed my overall forecast and analysis for the 8 pairs that I'm currently focusing on for this year, which is USD CAD, still holding that short, Euro USD, also short, Pound USD on the sidelines to make the market, wait for the market to develop. Same thing for Pound Yen, still waiting for that market to fully develop. USD Yen, we're waiting to see, well, we're still holding our position, but we are simply monitoring price action there. Now, if we notice, while we are here on the live, we have taken out one level already. Taken out that level in. We have taken out the level at 1803. So we can say immediately that the next target, we would have potentially completed the 5-wave cycle down. So let's move this in, or let's wait to see exactly where this candle will close, because we could very well get the market to move even lower, right? This wave coming in directly within that parallel channel. So let's just reset the chart so you see it a bit clearer. So the market is holding firm to that parallel channel based on Elliott Wave's channeling guidelines, which is very different from you just creating a channel based on putting trend lines together, right? Because if you notice that my overall channels here did not extend all the way out to encapsulate all price action, but instead focus on where I had the ending of the wave counts, right? So that's a little bit different from what you'll be looking at with your general channels, right, that you draw. So what we have here now, like I said, we have taken out the lows there, and it's just to monitor to see exactly where this market would actually go, all right? So we now have wave 5 potentially ending anywhere within these areas. We don't know if it is actually wave C as yet. But what we want to do is to keep monitoring this price action. The next target point for us that we want to be looking at is this zone down here, wave, this level right in here, 1764. That's the level that we are now focusing on. Will price take out that low, right? And if that's the case where this is a 5-wave countdown and the market creates a 5-wave move up, 3-wave move correction, and then continues to go higher. All right, let's say that price does something like this. Remember, I had labeled wave 1, wave 2. This overall structure would potentially be wave 3, but let's say it's wave C. How would I go about doing that? All I would do is label here as an A wave. This would be a B wave. This would be the C wave within wave C. So now it's monitoring the situation now, seeing exactly how gold will actually play out. So you're seeing the Elliott wave principles live at work, and we're able to utilize it to determine the outcome of gold. All right, so we have a clear indication of how the market is reacting to gold. Right? So if you're in this trade, you should all be smiling right now. Let's see what is transpiring on the others. Like I said, not much change. We're just doing the recap. All right, so let's see how this market would conclude. Right, so this is it for the week. We will be live again come Tuesday of next week. So if you guys have any pair that you would want me to look at, I will give you about a minute to put them in so I can assess, and then we can bring the session to a close for the week if you don't have anything for me to look at. All right, so have a great weekend, guys, and let's listen to some music in the meantime until you guys decide whether or not we are going to be looking at some stuff.